Hey everyone, welcome back. You asked for it, a deep dive on Adani Enterprises' latest financials.
Buckle up.
We've got the company's fresh press release right here.
Ooh, hot off the presses.
And to make sure those numbers really add up,
Absolutely.
we've got the auditor's report too. Ready to get started?
Let's dive in.
All right, so first things first, Adani Enterprises, not your typical company, right?
Definitely not.
Yeah.
This is a conglomerate with a hand in pretty much every major sector in India.
Resources, energy.
Airports even.
Yeah, they're everywhere.
Yeah, so their performance kind of gives us a peek into how the whole Indian economy is doing.
Interesting.
Yeah.
Okay, well, their latest report shows a consolidated profit of 1,989.19 crore for Q2 FY25.
Okay.
That's down from the last quarter, but it is up year over year.
Right.
Revenue sits at a hefty 82,608.07 crore.
Wow.
So for a company this size, I mean, is that profit margin something to celebrate or?
Are there warning signs maybe?
Yeah, hidden in the details.
Yeah. Well, it's not just about looking at the profit number itself.
Yeah.
With a company like Adani, we got to consider things like debt levels and how each of their different segments are performing.
So a deeper dive is definitely needed.
For sure.
All right, well, let's dive into those segments then.
Okay.
The press release highlights some pretty big wins for their new energy ecosystem.
Oh, yeah. That's an interesting one.
What's fueling all that growth?
Well, it's really interesting to see how they're taking advantage of the whole global shift towards renewables, right?
Yeah.
Their investments in solar and green hydrogen are clearly paying off.
Yeah.
Now, this segment, it's still relatively small compared to their, more traditional businesses,
Sure.
but it's growing like crazy. Like, it's really impressive.
Yeah, that's definitely a trend worth watching, especially as we all shift to cleaner energy sources.
Absolutely.
Now let's talk about that auditor's report.
Okay.
It's like a financial health check.
Yeah.
Making sure everything's above board, right?
Exactly. So the auditor go through all the company's financial statements, make sure they're sticking to the rules, making sure everything is accurate.
Yeah.
Really reflects their financial position.
So it's for investors then, mainly?
Yeah, investors rely on this to make good decisions.
Okay, so what's the verdict then? Clean bill of health or?
Or are there some red flags?
Yeah. Are there any red flags?
Well, the report largely gives them a thumbs up, but there are some caveats for sure. Some things we need to look at more closely.
This is where it gets interesting. So one of those caveats is the situation with Mumbai International Airport Ltd. MAL, yeah. The auditor specifically flags ongoing legal proceedings and investigations surrounding it.
Yeah, this raises some concerns about how they're managing things, corporate governance and financial transparency.
Yeah.
The auditor's report points to a potential misuse of funds at MAL.
Oh, wow.
It's a pretty substantial amount, like 845.76 crore.
Okay.
There are investigations by the Ministry of Corporate Affairs and even a charge sheet filed by the Central Bureau of Investigation.
Wow. Okay, that sounds serious. So what are they saying happened? Why should we care?
So basically, there are questions about how certain funds were used at MEL.
Okay.
Were those actions appropriate?
Yeah.
And the investigations are looking into potential irregularities and, what kind of financial impact they might have.
So Adani's saying, there's nothing to worry about, though, right?
Yeah, the report does mention that Adani's management thinks these investigations won't really have any big consequences.
Okay.
However, the auditor isn't necessarily saying they agree.
Right.
Just stating what the management has said, basically.
So not exactly clear cut.
Right.
Are investors buying that, though? Or are there still doubts?
Well, there's definitely some uncertainty around how all this is going to play out. Until there's a resolution, it's something investors got to keep in mind,
That makes sense. Now, we can't ignore the elephant in the room, right? That short seller report from earlier this year that kind of shook things up. The auditor's report mentions it, but also says Adani believes it's baseless.
Yeah, but you got to remember, the auditors is just reporting what the management told them.
Okay.
They're not saying whether they think those claims are true or not.
So should investors still be worried about that, or is it old news?
Well, Adani's stock has recovered a bit since the report came out.
Yeah.
But there's no denying it had an impact.
Of course.
Yeah, and the market's going to be watching closely.
To see what they do.
Yeah, to see how Adani addresses those concerns and if they do anything to be more transparent, better corporate governance.
Right. Regain that trust.
Exactly.
So it seems like there's more to looking at Adani than just their profits.
Yeah, for sure.
Speaking of which, the press release also says they're issuing more debt.
Oh, interesting.
So what's the reason for that?
So they're planning to issue these non-convertible debentures which are basically loans they can't turn into shares, for up to 2,000 crore.
Wow.
So this shows they're looking to raise capital for, future projects, expansions, that sort of thing.
So even with everything else going on, they're still, like, full steam ahead.
Seems like it. Taking on more debt suggests they're pretty confident about future returns, returns that'll be bigger than what it cost them to borrow.
But doesn't adding more debt make them even more risky? Especially with those potential legal issues we talked about?
That's a good point. More debt does mean more risk.
Yeah.
Higher interest payments, right. And if things don't go as planned, their profits could really be squeezed. Investors are definitely going to be keeping a close eye on how they handle all that debt.
Yeah, that's a tough balancing act.
For sure.
To make things even more interesting, the press release mentions they're withdrawing a planned scheme of arrangement with Adani Wilmar Ltd.
Yeah, that was interesting.
Can you give us the rundown on that?
So the initial plan, they approved it back in August,
Right.
was to kind of restructure the relationship between Adani Enterprises and Adani Wilmar, which is the edible oils business. The idea was to streamline things, maybe unlock some value.
So why this sudden change of plans?
It seems Adani Wilmar needs to focus on meeting some regulatory requirements first.
Okay.
Specifically the ones about minimum public shareholding norms.
Okay.
So that's probably why they pulled back from the scheme, at least for now.
Does this withdrawal signal, like, bigger problems for Adani Enterprises?
It shouldn't have a huge impact on their overall financials.
Yeah.
But it does show how complicated it is to manage a company like this, so many different interests.
Yeah, we're definitely getting a peek behind the curtain of this giant corporation.
For sure.
There's a lot going on here.
Yeah, and we've only just scratched the surface. There's a lot more in those financial statements.
We want to keep our listener waiting. Okay, so there's something else in the report that, I don't know, it kind of jumped out at me.
Oh, yeah. What's that?
This whole thing about disputed custom duties.
Oh, right. Yep.
Apparently, Adani and the Customs Department don't see eye to eye over, like, 863.62 crore.
That's a lot of money.
That's not small change.
No, it's definitely significant.
So what happened? Are they trying to, like, skip out on import taxes or something?
Well, it's a little more complicated than that. The issue comes from how they're interpreting custom duty levies on coal imports.
Okay.
So the Customs Department slapped them with these demand notices for this big amount.
Right.
But Adani's fighting back, saying, nope, we don't owe that.
So what's the argument then? What are they saying?
Adani's saying they're basically a middleman, a merchant trader.
Okay.
They import the coal for their customers, right?
Yeah.
So they're saying the customers should be the ones paying the duty, not them.
Ah, so it's a who pays battle, basically.
Yeah, exactly. And it could have some interesting implications.
Like what? What happens if they lose?
Well, Adani says they usually get that money back from their customers, so they don't think it'll have a huge impact on their finances.
Okay.
But if the Customs Department wins, it could set a precedent for future imports. Yeah, it might affect their profits and how they do business down the line.
It's another thing to think about when we're looking at their financial health.
Definitely.
All right, let's shift gears a bit. Let's talk about debt financing.
Okay.
Adani seems to be really active in raising capital through all sorts of debt.
They are, especially those non-convertible debentures we talked about earlier.
Right, so tell me more about those. How are they using all these different types of debt?
Well, they've been using a whole bunch of different debt instruments to fuel their growth. Like, for example, they issued secured, redeemable, non-convertible debentures.
Which are?
They're basically loans backed by specific assets.
Okay.
Worth 300 crore in several different chunks.
Okay.
But those have actually already matured and been repaid.
So they borrowed and paid it back on time, responsible. What were those particular debentures secured by, though?
Those were backed by shares from one of their subsidiaries, Adani Road Transport Ltd.
Okay.
Pledged as collateral, basically.
Got it. So it's not just about the debt, it's also about what's backing it up.
Exactly.
They used Adani Road Transport as security for other debentures too, right?
They did. They issued some unrated, unlisted, secured, redeemable debentures worth 1,950 crore.
Wow.
Again, using shares of Adani Road Transport Ltd. As security.
Okay.
And then just last quarter, they issued even more secured, rated, listed, redeemable debentures, this time for 800 crore through a public issue.
Wow, that's a lot of debentures. Why are they so focused on debt instead of, say, issuing more shares?
Debt can be a really attractive option for companies like Adani. For one thing, it can be cheaper than equity financing, especially when interest rates are low.
Okay, that makes sense.
Plus, they can use their existing assets to raise a lot of money without giving up ownership.
Right, right.
And here's another bonus. The interest payments on debt are often tax deductible.
So it's a win-win from a business perspective.
Pretty much.
But, and this is a big, all this debt increases their risk too, doesn't it? I mean, especially if those legal issues we talked about end up costing them a ton of money.
You're not wrong. A big pile of debt can make any company shaky, especially when the economy takes a dip or interest rates start climbing.
Yeah.
If their profits don't grow like they're expecting, or if something unexpected happens and they have to shell out a bunch of cash, they could have trouble paying back all that debt.
And then what?
Financial trouble. Investors will definitely be watching their debt situation very closely.
Talk about a balancing act.
It is. They got to fuel those big growth plans, but also make sure they're not drowning in debt.
Right. Keep things sustainable.
Exactly.
Okay, let's zoom out for a second. To get a better sense of their overall performance, let's look at how each of their different segments are doing.
Good idea.
They really do have a hand in everything.
They do. And looking at each segment helps us understand what's really driving their profits.
Okay, so what's the breakdown?
For this past quarter, their Integrated Resources Management segment, which includes all their coal stuff, mining, logistics, all that,
Yeah.
brought in the most revenue, 9,320.21 crore.
So coal is still king.
For now.
But we talked about their new energy ecosystem growing like crazy.
It is. That segment brought in 3,043.87 crore in revenue for the quarter.
Okay, not bad.
Not bad at all. Still smaller than their traditional businesses, but growing fast.
Shows how things are changing.
Yeah, the shift towards renewables is definitely happening.
How about their other ventures, like airports and roads?
Airports brought in 2,246.58 crore.
Okay.
And roads contributed 2,471.14 crore.
So they're doing well.
Yeah, these infrastructure segments are really important for Adani.
How so?
Well, they fit right in with India's development goals, building up the country.
So it's not all about profits for them.
Right, they're part of something bigger.
But it can't all be sunshine and roses, can it?
You're right, some segments are doing better than others. Their commercial mining segment, for example, is actually operating at a loss right now.
Oh, wow.
Yeah, it shows that even when you're as big as Adani, breaking into new sectors can be tough, Risky and expensive.
And we can't forget those legal issues surrounding MEAL, which is part of their airports segment, right?
Definitely not. That whole situation could have a big impact on how well that segment performs going forward.
Right. It's not over yet.
Nope.
Yep.
And it shows that even a company as big and diverse as Adani can face setbacks and unexpected problems.
It's a good reminder for all of us, I think.
It is. When you're analyzing a company like Adani, you can't just look at the big numbers. You got to dig deeper, look at each piece, how they're handling their debt, and any legal or regulatory stuff they're dealing with.
We're definitely getting a much clearer picture of this company.
Yeah, much clearer.
They're a major player in the Indian economy, involved in all these vital sectors.
But they're also navigating some choppy waters.
Exactly. So to wrap things up, let's think about what this all means for investors.
Okay, good idea.
What are the key takeaways here? What should people keep in mind if they're thinking about Adani Enterprises?
That's the million-dollar question. Let's break it down and see what insights we can offer.
Okay, so we've looked a lot with Adani Enterprises. We've seen their impressive profits, their ventures in green energy and infrastructure.
A lot to unpack.
But we've also, uncovered some potential issues.
Right, like those legal challenges and that big debt load.
Yeah, so where does that leave us? Is this company set for continued success, or
are there some problems brewing?
Yeah, what do you think?
Well, Adani Enterprises definitely has a lot going for it. I mean, they've got a history of success.
Right.
And they're in a great position to benefit from India's growth.
Yeah, for sure.
Their investments in key sectors like infrastructure and renewable energy, that aligns perfectly with where the country's headed.
Yeah, it's smart.
It is.
But, as we've talked about, there are some things that could trip them up.
Yeah, those legal challenges, especially that MEL situation, could really hurt their bottom line.
Sure.
And all that debt, while it's pretty common for companies that are growing fast,
Right.
It could become a real problem if interest rates go up or if their profits take a hit.
Yeah, it's a risk for sure.
It is. So it really comes down to weighing the potential rewards against the risks.
Yeah, got to look at both sides.
Exactly. Investors need to think carefully about both before making any decisions.
So for investors who are considering Adani, what are the key things they should be watching?
Well, first off, the outcome of those legal cases, especially the MEL one, is going to be huge.
Yeah, any big fines or damage to their reputation could have a domino effect.
Right, those legal battles could get expensive, not to mention the hit to their image. And then there's their debt.
Ah, yes, the debt.
Investors need to keep an eye on how they're managing all that, especially as they keep growing. It's a key indicator of how stable they are financially.
It's like walking a tightrope.
It is. They got to balance growth with responsible financial management. And, of course, keep an eye on how their different segments are doing.
Right, especially those that are supposed to drive future growth.
Exactly. Like the new energy ecosystem.
Yeah.
If those newer areas do well, that'll help offset any problems in their more traditional businesses.
So there's a lot for investors to consider.
Oh, yeah, it's not a simple decision. It's not just buy or sell. There's a lot to think about.
Definitely not a quick decision.
Nope. Adani Enterprises is a complex company in a complex world. Do your research, think about their strengths and weaknesses, and then you can make an informed decision.
Well, I think we've given our listeners a lot to think about.
A good starting point.
It's been really interesting exploring their financials, seeing both the opportunities and the risks.
It has. But remember, the world of finance is always changing. New information comes out all the time.
Right, got to stay informed.
Exactly. Stay curious, keep asking questions, and really try to understand what's going on.
Couldn't have said it better myself. And hey, if you ever need help figuring things out, you know where to find us.
We're always here to help.
Just bring your sources, and we'll dive in together. Until next time, happy investing.